Hello traders, Wanjiru Gishangi here. I'm doing a quick analysis on USD CAD. I'll be doing it on my phone since I'm on the road and there are so many messages asking about my analysis on the monetary policy. So this is the daily, this is USD CAD daily. I hope you can see the time frame on the top there. So when you're doing your analysis for such a policy or such an event, so today we're having the CAD monetary policy, you want to start on your daily chart, but you can still start on the weekly, the monthly. But for me, it's easy if you start on the daily because you want to see where that day opened at. So with the daily, you want to go to the left, the left. When you always look to the left, you're right, because you basically looking at what happened at that specific level in the past, and you would imagine that the market has a higher probability. Remember that Forex is a probability field, so there is a higher probability that the market will repeat what it had done on the same price point. So to the left, you can see that at this point here, at this point, let me mark something. I'm talking about this point here. At this point, you can see that this is a demand zone. The market got to this sharp. Let me delete that a bit. So this is the area. This is the area that I'm talking about. Hope you can see this part here. So it gave us a sharp V, or what you may call an inverted A, with the consolidation sharp V, and there was this huge movement to the top. Therefore, this was a very, very important or very strong demand zone. Then the market came back to the same point, here. But what happened at this point is there was a reaction to the top, but the buyers were not that strong, so they kind of just retested our MAO, which is the 200 EMA, or the medium term trend EMA. So it retested and bounced back. Now when the market came back or bounced back to the same price point, what happened? Now the demand, remember, it was a very strong demand in December 2019. It was also a very strong demand in September 2020. But on 4th of February, what happened? That demand zone now did not hold. Okay, this is the point that I'm talking about, this point here. It did not hold. So what happened? It turned. Now it starts from being a demand zone to a supply zone. Okay, so it stopped being a demand zone. It became a supply zone. So it's demand turned supply. Now the market hasn't been to that level until now. It's been on that level. It's there, same position, same price point. For people who really don't get it, this is what I'm saying. If I draw for you a line there, the blue line, should I give it a different color? No, but it's okay. The blue line you're seeing, that is the exact point where the market is at today, or the area of interest, or the point of interest, whatever you want to call it. It's at 0.1.30087, and I've just said it was previously a very strong demand that turned into supply, has not been retested for a while, and now the market is there. Now what happens if a demand turns to supply? You expect a retest, and where is that retest supposed to take the market from? That is supposed to retest the newly formed zone. And what is our newly formed zone on USD CAD? It's a supply zone. So this area here is what we call a supply zone. Supply zone. It would look really cute if I did it on my computer, but we only have 24 minutes to the event, so I may not have time to set it up. But we are at a supply zone. Now, what are the rules of demand and supply? What are the rules of demand and supply? One, if a supply zone is broken by a bullish candle, it turns to be a demand zone. If a demand zone is broken by a full body bearish candle, it turns to be a supply zone. Now our zone here hasn't been broken, but it has been retested quite for like 3 times now. See this first point, and we have a second point, and we had what started with the NFP. Okay, you see this? These are 3 points. What do you expect would happen now with our event? There are only 2 outcomes, okay, which one has a 98% chance and maybe the other one has a 2% chance, my opinion. So our supply zone has had 1 touch, 2 touches, and the 3rd touch. So we'd expect the supply to be respected and the market to move downward. Why? Look at the candlestick. I did a video on candlestick patterns. So look at the candlestick patterns around the 3rd touch. Now we're getting into the details. We're still on the daily, but we're getting into the details now. On the daily chart, what are we having there? We have this candlestick language. You can watch the candlestick patterns to understand what I'm saying. So we have this being a very strong bearish move, which has already been retested, and what's forming now, we can imagine with the spinning top, would expect a strong bearish candlestick. That is one probability. Then the other probability would be that this supply zone now gets a very huge buying candlestick or a bullish candlestick that would actually close above here before the event on the lower time frames. Okay, so you'd get a bullish candlestick closing above there, and then would say that our supply zone has been broken to the top side, and then it turns back to be a demand. So that's on the daily. What about on the 4-hour chart? What are we having on our 4-hour chart? Again, on the same, we're on the supply zone, whether we still on the daily supply zone. Here we have this very huge move to the top. See this violent push. Let me enlarge this for people. Can you see this move here that happened, I think, on 1st July? What has a very huge or explosive move to the top, to the peak high or the peak low signify? It's one of those reversal ideas, okay, or reversal patterns that usually have. There is that momentum for clearing out. You can call it the power of 3, or whichever name fits or floats your boat. But this move here, it's a screaming move that signifies reversal. But remember, nothing is cast on stone. We've been pushing up. We have this scream of a reversal, but we still want to see what's happening around that reversal point, because if it's not enough, then we would expect the market to still break through, even though we have this. Now going to the minus the tiny details, we have the explosion, then we have some little trapping. You see this W pattern here, okay, some little trapping, or you can just say the market has been moving sideways, but that move to the sideways gave us a 3 hit to the top with an evening star. Okay, we have that with an evening star, which was retested yesterday, I think, New York session, and today we've been having this move to the downside. See these 3 candlesticks here to the downside. Now it's 20 minutes to the event. 2 options. This market has no option of retesting. We can say we'll be having which is also likely, we can have the 4th hit, and then the market goes back down, which has more than 60% chance of happening. Or we can have a lower time frame, which would be the 4 hours. So we'd expect this candlestick to close above here, which is not so likely, or the 1 hour chart to have a bullish candlestick above our supply zone, and then would say that the market pushed higher. Okay, so now how can you trade this? Well, on the 4 hour, you can go to the 30-minute 30-minute chart. You can have your trades from here. So we've been pushing down. We can expect a reversal with the event to give us that. Expect the market to push, maybe make this liquidity, retest, then come back. Okay, or you can expect the market to just continue downwards. So those are the two scenarios that you expect, but for me, I would say the move down or the retesting down has a 60% chance, while the break of the supply has a 40% chance. So go ahead and trade it in the way that you feel works best for you. I wish you the very best. Remember, it's doable.